Ladies and gentlemen, good day, and welcome to Ceigall India Limited Q1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aryan Sumra from MUFG India. Thank you, and over to you, sir.
Thank you. Good evening, ladies and gentlemen. I welcome you all to the Q1 FY26 earnings conference call for Ceigall India Limited. To discuss this quarter's full year and business performance, we have from the management, Mr. Ceigall, Chairman cum Managing Director, Mr. Bhagat Singh, Group CFO, Mr. Kapil Agarwal, CFO. Before we proceed with this call, I would like to mention that some of the statements made in today's call may be forward-looking and may involve risk and uncertainties. For more details, kindly refer to the investor presentation and other filings that can be found on the company's website. Without further ado, I would like to hand the call over to the management for their opening comments, and then we'll open the floor for Q&A. Thank you, and over to you, sir.
Good evening, good evening, everyone. This is Ceigall. I'm pleased to welcome you to the Q1 financial year 26 earnings call for Ceigall India Limited. Our financial results and investor presentation have been uploaded on the stock exchanges. I trust you had a chance to review them. I'm joined today by Bhagat Singh, our Group CFO, and Kapil Agarwal, our CFO. Starting with the macroeconomic backdrop, the Indian economy continues to demonstrate strong resilience despite global headwinds, including the ongoing geopolitical tension and recently imposed tariffs by US. India's GDP is expected to grow by approximately 6.3% in financial year 26, supported by robust infrastructure spending growth across key sectors as per the recent report by Fitch Ratings. The first quarter of the financial year brought some initial headwinds, particularly due to the early monsoon activity in some states, which temporarily slowed construction activity. However, this phase provided an opportunity to reinforce our operational foundation and enhance preparedness for the coming quarters. We are optimistic about business momentum improving as the year progresses. The government continued emphasis on the urban and the rural development, metro expansion, transport infrastructure, transmission and distribution, a strong way to growth and a renewable business. The NHAI, for instance, is expected to bid out 124 road projects worth 3.4 lakh crore in financial year 26 across HAM, BOT and EPC model. We are well positioned to leverage these opportunities. The recent 50 basis point rate cut by RBI is another positive development, making project financing more cost effective, thereby improving margins and further supporting the sector's growth. Coming to our performance, we maintained stable momentum in Q1, supported by the diversified mix of EPC and HAM projects. In line with the long-term strategy, we continue to expand our business portfolio across segments and geographies. Our dependence on highway projects is steadily decreasing as we strengthen our presence in railways, metros, tunneling, T&D, renewable business, and other underground infrastructure. I am pleased to share some exciting updates on our ongoing and upcoming projects. First, I'm happy to announce that both of our Ayodhya projects, Southern and Northern Ayodhya, valued at 23,160 million, have now started. These projects mark another important step in strengthening our presence in this region. I am confident they'll set a new benchmark execution qualities and timeline. In Punjab, out of two HAM projects, the appointed date for one is scheduled before October, while the other is planned again before October. The company also infused 4,198.41 million of the equity into HAM projects up to June 2025, an addition of 759.6 million in July 2025, taking the total equity infusion to date to 5,129.2 million. Post-IPO, equity of 2,592.5 million has been infused. This steady progress keeps us well on track with a commitment in the state. On VRK 11 and 12 front, we have positive development to report. We are now expecting the stage 1 clearance as early as possible, which will be a significant milestone moving these projects forward. Adding to our momentum, the recent NHAI MORTH circular dated 11 July 2025 introducing the new qualifying criteria is a great and a welcome change. We have received 4 entities till date for Ceigall Malod Abor Sadhwali project amounting to 1,771.23 million from NHAI. This development aligns well with our capabilities and will further escalate our growth in the infrastructure sector. I am also delighted to share that we have now entered into transmission and distribution and renewable energy businesses. As a first win in this new vertical, we have emerged as L1 in Ceigall, 400 kV substation, tender worth 4,900 million. This is a clear sign of our ability to diversify and compete strongly in emerging sectors. These achievements are not just milestones. They're stepping stones towards our vision of becoming a leader across the multiple infrastructure domains. Let's continue to work with the same passion, precision, and purpose that have brought us this far. On the legal front, the arbitral tribunal ruled in our favor in the matter of the Himachal Pradesh Works Department regarding the winding improvement of NH 88. The award was of 19.36 crore along with the future interest. Additionally, in the ongoing matter with Punjab Small Scale Industry and Export Corporation, we received the arbitral award of approximately 3.17 crore along with the applicable interest. Our order book is well diversified across 8 states, minimizing both regional and project concentration risk. We are currently executing multiple mid to large size projects across different sectors, which supports more balanced cash flow and faster execution timelines. Now turning to the financials, our standalone revenue from the operation, excluding the bonus and royalty, rose to 8,183 million in Q1, financial year 26, at 8.7% increase from 7,530 million in Q1, financial year 25. EBITDA for the quarter stood at 935 million, reflecting a margin of 11.42%, while the profit after the tax came at 559 million with a PAT margin of 6.83%. At June 30, 2025, order book stood at 103,374 million, comprising 36.87% from EPC project, 61.75% from HAM project, 1.38% from BOT project. In terms of the verticals, 83.42% comes from elevated, highways, structures and flyovers, 2.05% from tunnel, 13.15% from the railway and metro projects, and remaining 1.3% from emerging segments like airport runway and bus terminals. Now I would like to hand over the call to the Group CFO, Bhagat Singh, who will take you through the company's financial performance. Thank you.
Thank you, Ramneek sir. Good evening. Good evening, everyone. I will now take you through the financial highlights for the first quarter FY26, beginning with the standalone performance. For Q1 FY26, revenue from operation, excluding bonus and royalty, stood at 8,183 million, representing 8.7% Y-on-Y growth from 7,530 million in Q1 FY25. EBITDA, again, excluding the bonus and royalty, stood at 935 million compared to 961 million in the same quarter last year. This translates into an EBITDA margin of 11.42%, which is within the guidance which we have given in the earnings calls. Profit after tax came at 559 million compared to 691 million in Q1 FY25. On the debt side, our standalone gross debt stood at 6,848 million, comprising of 160.85 million in equipment loan, rupees 3,370.90 million in term loans, and rupees 3,316.42 million in the working capital loans. Moving on to the consolidated number for Q1 FY26, revenue from operation, excluding bonus and royalty, reached at 8,382 million, marking a 4.3% increase from rupees 8,038 million in the corresponding quarter last year. EBITDA for the quarter stood at 1,091 million compared to 1,225 million in Q1 FY25 with an EBITDA margin of 13.02%. PAT for the quarter came at rupees 513 million, resulting in net margin of 6.12%. On consolidated basis, gross debt stood at 14,247 million, including rupees 652.12 million in equipment term loan, rupees 3,558.40 million in term loan, rupees 6,720.06 million in the HAM term loan, and rupees 3,316.42 million in the working capital loan. On net debt to equity ratio, it remained healthy for the company on a consolidated basis, which stood at 0.5 as on Q1 FY26. In terms of our working capital, our net working capital days stood at 75 days as of 30th June 2025. This figure factors in inventory days, WIP days, receivable, and vendor paid. On the execution front, we currently have 29 ongoing projects with a total order book of 1,03,374 million. This includes 13 EPC projects, 8 HAM projects, 1 BOT projects, covering a wide range of sectors including roads, highways, tunnels, railways, metros, airports, runways, and bus terminals. Importantly, NHAI projects contribute at 80.47% of our total order book. With a diverse portfolio, strong order pipeline, and continued focus of the government on the infrastructure development, we are very well positioned to sustain momentum and drive long-term growth. With this, I conclude my opening remarks and open the floor for question and answer. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Vaibhav Shah from JM Financial. Please go ahead.
Hi, sir. So firstly, we haven't removed the Bhubaneswar Metro from the order book. So there was some news that the project has been cancelled. So what is the status on that?
So that happened in July, and yes, we have removed it in our current thing. Yes, that project got terminated by Delhi Metro because they were unable to start. From our side, we mobilized, we started the initial diversion and the piling work. So the government of Odisha wants to change the project into underground with double decker, and they want to get a fresh contract for that. So yes, it has been terminated. We have already uploaded that on Ceigall.
So will we be interested in the newer tender which comes out?
Yes, why not? We already bid everywhere for metro, and we have already won a new vertical project, which is a T&D in Maharashtra, Ceigall, which is closer to 500 crores. And in that, we have to build it in Ceigall, and there are annuities for next 35 years, annuity of about 58.5 crore every year.
Okay. And sir, what work have we already done in the project Bhubaneswar, and what are the receivables, and have you received any mobilization advance from the client?
Yes, we have received one short of mobilization vans, but the other, we haven't received it. And in fact, the department has to return our bank guarantees also. But they want to settle it. The discussion has already started. Yes, there would be a claim. We've already put one claim. The second claim is ongoing, and it should be submitted very soon.
So what are our net receivables as of now from the project, from the client?
From this Bhubaneswar?
Yeah.
1 billion. How much is the receivable? So we have already spent close to 30 crores on this project, and the claims are underway. Besides the machinery, we have sent a lot of new machinery for this project, and we have established the camp also, so that the team is already on the job to evaluate and submit a claim. And receivables, yes, as I said before, they have given us one part of the mobilization one. The second was never given, and the mobilization one's BG is also to be returned. And we are going to submit a fresh bill where diversion was done or other works were done. So it'll be submitted very soon.
Okay. Sir, so mobilization advance would have been somewhere around 30 odd crores,
No,
assuming it would be 5%.
21 crore, 21 crore.
21 crores. Okay. Yeah. So secondly, on the equity infusion front, so what are our pending equity to be infused, and how much will be putting it in 26, 27, and 28?
So I think it should be around 800 crore. Exact number, Bhagat will tell.
872 crores.
872 crores. So typically, these large projects are 30 months, and we are targeting to put in next 2.5 years.
Correct.
And the equity which we've already infused, we've already shared in the call.
So can we give guidance for the entire year for 26, 27, and 28?
So, only VRK 11 and 12 have not started. Otherwise, equity for Ludhiana, Bathinda, and Ludhiana Southern Bypass, as per the requirement of the sanction letter, we will be putting our equity in next, say, about 24 months.
Okay. Okay. So when do we expect to receive the appointed dates for VRK 11 and VRK 12?
So VRK 11 and 12, we've been getting a positive response from the government of Jharkhand, where we are expecting to get the stage 1 approval anytime. Once the stage 1 approval is there, I think we should get a appointed date.
So any guidance per se in 2Q or 3Q are we targeting?
So we are targeting that we should get it in 3Q, quarter 3.
For both the projects?
Yeah. We should, because they're at the same stage. And for Punjab, we should get it one by next month. Conservative before.
Southern Ludhiana?
Southern Ludhiana, October.
October. And Moga Barnala?
Moga Barnala is the same Ludhiana, Bathinda.
For that?
We should get it next month. We've already started the mobilization and the pre-construction activities there at the site.
Okay. And so lastly, last question from my end, in terms of guidance, so given the delay in ADs for VRK 11 and 12, and you are factoring a good amount of execution in 26 itself, so are you revising the guidance for FY 26?
No. So, since, certain approvals are delayed by the government, so there we are helpless. Otherwise, we are on track in terms of, we already started 2 projects in UP, that's Ayodhya. And as per the earlier guidance, we are trying our level best to achieve that. Because
also, Metro Rail is also cancelled, so the revenue from that also has been.
Yes. So the first quarter only got affected because of the metro project and the monsoon season, which started early. Because of 3 of our sites have got affected due to the monsoon.
So we maintain our revenue guidance of 10 to 15%?
Yes.
And margins of 11 to 12%, pure EPC?
Yes.
Thank you, sir. Those are my questions. I'll come back in the queue.
Thank you, Ji.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Good evening, sir. Thanks for the opportunity. Sir, is it fair to assume that all 6 projects where the work is not started, especially on HAM, we expect the appointed date to be in place by this fiscal year? Is that a fair assumption?
So, thank you for the question. We have already started 2 projects, which is Southern Ayodhya and Northern Ayodhya Bypass. Third one is getting started next month. Fourth one is getting started in October. And we are targeting quarter 3 for VRK 11 and 12. So, we are really expecting all these projects will be started this year.
Understood. So my second question is, can you help us understand your entry in T&D, especially on TBCB side, and what is your aspiration for this segment in medium term?
So, there are a lot of works, and a few days back also there was a news that government is going to spend in 100 billions on T&D business. And we also see, as you know, we've acquired a CNC which has some machinery and expertise and PQ, and in fact, team for working, because the team also has joined us. We are really looking forward to grow in this business, as a lot of projects are available in the market in terms of this tariff-based plan. We've already are successful in one project, and we are waiting for the LOI. And we have quoted for other transmission line business also in the same department. And we are looking forward to add good order book from this particular division. We've already quoted for a renewable business also, that is the Kusum scheme in Madhya Pradesh.
Understood, sir. My last question, sir. Are you seeing the tenders pipeline from NHAI building up since NHAI announced 3.3 trillion? Or do you think this will most likely will happen in the second half of the fiscal?
So, good question. NHAI have done a cleanup in last 1.5 years, where they were not, going for tendering till the time land is available, like in the cases of our dams, where the tenders were allotted and land was not available. Now, till the time there's availability of the land, there is not bidding out. Now, NHAI has announced 25 days back that they're coming up with a lot of tenders worth 3.4 crores or something, and in which about 70% is HAM, 20% is BOT, and 10% is EPC. My figures might vary 10-15%. This is what we've understood, and we've got the list. So these tenders, they are targeting to lot in this year. And good thing about NHAI and MORTH, NHADCL is they have changed the qualifying criteria, which happened on 11th of July last month, with which I really feel there would be a great U-turn in our industry, because earlier the competition level was crazy, and now it'll be a healthy competition, because larger the net worth, you can get more contracts. The pre-qualification, which was earlier diluted during the COVID, has been reinstated and made a better one for large companies and companies like us. And we really look forward to it. And I think there will be no dearth of getting works in NHI as well, and in HAM also. So people have to plan and have to pick and choose for these large projects from NHI and MORTH.
Understood. Thank you. That's it from my side. Thank you, sir.
Pleasure.
Thank you. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Thank you so much for taking my question, sir. Hopefully, I'm audible.
Yes. Good evening, Javi.
Yeah. Hi, sir. So, sir, just wanted to know, I think since the last few quarters, our order book has been in the range of around 10,500 crores. So, now, how do we see that going forward? And just wanted to know, I think we have around 5,000 crores of EPC contracts, right? So, what is the execution period for same, and why the guidance for revenue is around 10-15% when we have such a decently big order book?
So, good question. Thank you. So we have a mixed order book of HAM, BOT, and EPC. So typically, when we get a HAM tender, it takes about 1.5 years to 2 years to start the project. And EPC, it takes almost 5 to 6 months to start a project. Whereas these projects, the tenure of the projects ranges from 2 years to even 5 years. So typically, these large projects, because we are doing specialized structure projects, we are doing country's longest elevated, one of the longest elevated, which is Danapur Beta. So these projects are typically for 30 to, which goes up to 40 months also. And the revenue is divided into all 30 months, So it's typically like 2.5 years. So the order book which we have guided before, which is about 10,000 crore. So if we have to do it, it will be spread into 2.5 years.
Okay. Fair enough, sir. So based on that, also I think per year we should be crossing 4,000 crores, right? Even that days, and I don't know if they will be able to reach that this year, sir. Is that a fair assumption, sir?
So we have a target to reach there, and since we have got this new T&D business also, we are trying to get more order also, and gradually the order book value will also be increasing, coming months in progress.
Oh, okay. Fair enough, sir. And so the new NHI, order that we're speaking about that can come in. So what will be our targeted, order inflow for this year?
So our target is 5,000 crore.
Okay. 5,000 crores is our target. I just want to know, like, how is the competition intensity that you feel like? Is there very high? Will there be pricing pressure or, that can lead to some kind of margin issues, or how do we see it, sir?
So it was there before earlier, but now since the qualification criteria has been changed, so I think now the position will be changed, and we really look forward for doing healthy competition.
So there would not be a situation of undercutting or something. Everyone can be, enjoy healthy margins.
Yeah. So the large companies can only bid. More the network you have, you can get more contracts if you see this qualification.
Okay. Fair enough, sir. I just wanted to know, just like I think pre-IPO we were able to, grow at 40% plus. So when do we see, be able to reach at least, more than 25% growth target? Like how do we see, ability to reach that, sir, again?
We always try our level best. Best of the team, they are putting their best ability and trying to execute at the level best. And this team has done before, and we, as a board, always try, and management always try to push them for the best results and better results. But as I said before, whatever we guide, we really want to achieve and maintain our stability there. Organically growing always help in companies becoming larger companies.
Okay. Fair enough, sir. I just wanted to know, like this Bhubaneswar project, like, do we see any other kind of, risk of some projects, getting hampered down or, some pause coming, delay, any sort of that on ground do we see, sir?
So, not really at this moment. And otherwise also, let me tell you one thing. Wherever the project gets terminated, government always pays for the termination payment. And as I said before, we have already put a claim, and we are going to put another claim very soon, Delhi Metro. And, eventually, yes, order book is the loss, but it might take 2-3 years in getting the award. If you see, we've already got one award payment in our account in first quarter, and an award of 19.36 crore from one of the NH project in Himachal, and from Gamada around in December. So that way the company is very well in the contract division matter. So eventually there'll be no loss. It might take some time till the time the award money comes into the account.
Okay, fair. And just last question from my end, sir. So overall, on a consolidated basis, what kind of EBITDA margin is sustainable, sir?
Sir, on a standalone basis, we have guided an EBITDA of 11% to 11.5% pure EPC EBITDA margin, excluding bonus and royalty. And we are targeting that whatever turnover guidance of 10 to 15% growth and EBITDA margin of 11 to 11.5 pure EPC, we believe that we would be able to maintain the same in the future to come. Yes, as Ramnik sir mentioned, that we are entering into new domain to find it level best to generate value engineering in new verticals, and we are trying to generate delta over and above the guidance number. But that will depend upon the performance, and on a conservative note, we feel that whatever guidance we have given for turnover and EBITDA, we would be able to achieve the same.
Okay. So just wanted to know, sir, previously we've done 15% and our pure EPC is around, 11.5. So what's the difference of delta? Like how are we able to achieve the extra 3%? Like, could you just explain that, sir? I'm new to the industry. That's the only reason I'm asking that, sir. Yeah.
No problem. I'll give you a clarification. If you see our last earnings calls, we have guided that our pure EPC beta is 11 to 11.5%. That is generated by executing the EPC work. Over and above that, if we see the ladder to 15%, now what are the components which leads to 15%? One is royalty, which depend upon situation to situation. Another is a bonus, that is for early completion. Again, it depends whenever the project will be early completed and authority issue us a letter of award or bonus, we will book it. Lastly is a claim, that is again depend upon situation. So what we can say is, as an investor or as a company, we feel that we should take into consideration the pure EPC margin, because over and above the journey from pure EPC to 15% depend upon situation, depend upon the facts, and depend upon the contract which may or may not arise. But yes, we are trying to maintain the consistency of pure EPC margin over a period of time.
Okay, fair. Thank you so much for helping me with that, sir. All the best, sir. Yeah,
One more
thank
thing
you.
I would like to clarify.
Yeah.
One more thing I would like to clarify. Whatever we are talking about, it is a EPC margin of a Ceigall India Limited. But whatever investments we have made in the HAM assets, in the SPV, so whatever delta they are generating, that is being passed in the SPV. So that is also a profit of the company, but that's the earning, we will be booking or recognizing it in the books once the assets are monetized, either in the form of InvIT or in the form of asset sale.
Okay. Fair enough. So yeah, that's it from my side. All the best. Thank you.
Thank you.
Thank you. The next question is from the line of Jainam Jain from ICICI Securities. Please go ahead.
Good evening, management. Thank you for the opportunity. Sir, as you said earlier that there will be re-tendering for new Bhubaneswar metro project. Sir, will we be given any preference within that project?
No, thank you. But there is no preference as such. There is no right of preference. But yes, since we are established there, we'll try a level base to get the tender. But as such, there is no preference in the tender.
And sir, my second question is...
we established, we have already constructed the casting yard.
Hello.
Yeah, please go ahead.
Am I audible? Yeah. Sir, my second question is, what is the plan for asset monetization, given the fact that Molet has been already operational, Mandi Davul is also at the stage of completion, and also Jalbera, Saibab?
So we are always open to discussion, we do it also. So we always wait for the right multiples, and whenever we get it and we get a best price, we are ready to sell it. We are very open to
Are we looking to sell it out in this fiscal?
So, as I said before, it depends upon the right price. If we get it, why not? We are ready to sell it 3 times.
Okay, sir. Sir, I wanted a couple of data points pertaining to working capital. Sir, can you help me with inventory, trade receivables, and trade payables number? Also, if you have any retention money.
Yeah, sure. So as far as the working capital is concerned, so as on Q1 FY26, we have an inventory of 13 days. We have a debtors of 9 days. We have a creditors of 102 days, and we have a WIP of 99 days. So in effect, my net working capital is 75 days.
Sir, can you give those in the value terms?
Come again, please. Yeah.
Can you give those numbers in value terms?
Yes, please. So as on a standalone basis, my debtors stood at 841 crore, and on a consolidated basis, my debtors stood at 529 crores. And apart from debtors, my inventory value is 90 crore. My inventory value is 96 crores. My unbilled contract value is 1,014 crores, and my vendors are 818 crores.
816 crores. Okay.
Hello?
Sir, hello. Am I audible?
Yeah, please.
Sir, my last question is, what was the bonus and royalty income in the base quarter and in this quarter?
What is the bonus?
Bonus and royalty income, which were booked in Q1 FY25 and in this quarter.
No, there is no bonus or royalty income in this quarter. Whatever EBITDA we have quoted, what we have achieved in this quarter, that is a pure EPC EBITDA. What we have quoted in the press release, if you see, so we have quoted an EBITDA of 11.42%. That is a purely EPC margin that we have generated.
And sir, in base quarter?
Any futuristic statement, but as I mentioned that as we are completing the Bathinda-Diwali HAM project, so once the COT has been issued, it is likely, depending upon the issuance date, so it is likely that we may be getting the bonus for the Bathinda-Diwali HAM project.
Okay, sir. That answers my question. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Lokesh Kashikar from SMIFS Institutional Equities. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, couple of questions from my side. Firstly, just wanted to get sense on the NHAI pipeline. You have mentioned that it is around 3.4 lakh crore. But what do you think, what would the realistic number for FY26, considering that there has been projects in the pipeline, but tendering was very muted in the past couple of years? So just wanted your sense, what would the realistic number for awarding?
So, thank you so much for the question. NHI, this NHI only got it published, I think I was there in ET. These are the projects they are looking forward to bid out very soon. And few of them have been approved by the cabinet also. And the only thing where NHA did not bid out was they were waiting for the land acquisition to happen. So that, what has happened before, that the projects were allotted and they were not started for two years. They don't want to repeat that kind of instance. So that's the reason NHA allotments or projects got delayed. But now they are on right track and they have done a lot of homework. So they are ready to bid out these tenders, and majority of the tenders are available. So and few have got the cabinet approval also. So we are really looking forward to these tenders. And yes, you know it very well that NHA has done it before also. It is just a matter of time. And a good thing is the relaxation which everyone had in NHI bidding process has been tightened. And now where earlier a person can bid at say 15 or 20% net worth, now it has gone minimum 20% net worth. And then second, there is a kind of bid capacity requirement, which is a thing for all good companies, including us. And then the third one is the minimum single work requirement of 20% has gone to 30%. So only good large companies who executed large projects will be only qualified for these large projects.
Okay. So, but is it fair to assume that for these 3.4 lakh crores of projects that the NHA has mentioned, the land acquisition might be at the advanced stage, so the bidding would be happen very soon? Is it fair to assume?
So yes, the tenders which are already out, they've been doing a lot of working on that, and I really feel they have a constraint that they have to get the cabinet approval, and few of the projects they have started getting the cabinet approval also. We are very positive these projects, and fingers crossed that we'll try and get maximum. Thank you.
And so secondly, on the bid pipeline in other segment where we are targeting, let's say in the T&D segment or in the tunnel or in the metro segment. So can you just highlight bid pipeline on this segment as well?
So there are a lot of cities which are coming up with metro. Some are coming underground, some are coming viaducts or elevated. We keen to bid both types of projects. In fact, we were L2 in this Kolkata metro. It was cut and cover underground metro. So for us, the state doesn't matter, the region doesn't matter. We've been bidding across the country, and seen as we have 11 states. So we worked everywhere. So that's one point. Second, we are working with the railway also. Today also we have quoted one of the railway projects. And going forward, we have NHI, we have 10, 11 departments. So we have projects. We are trying to get projects in renewable also and T&D business also. T&D business is going to be a very big business. Because T&D, the good thing is, it's not only India. It's international business also you can grow well. So T&D is going to be a very, very good vertical for us.
Okay. So out of the targeted order inflow of 5,000 crores, So what is our internal target to bag projects from the other than road segment? Around 20-25%.
So if you ask me, we don't have any such target. We keep on bidding. Right now also we have quoted tenders worth 16,000 crore. We, the HAM BOT, we always target and plan in such a way that our project IRR should not be less than 25%. And for our EPC business, as we are getting this PAT and EBITDA, about 11.5 to 12%. So we always target to bid on these. It doesn't matter, we get highway business, we get elevated, we get structure, we get airport, we get tunneling business. So it doesn't matter because we have all kind of verticals, we have all kind of people with us. So we only target that we should get projects at.
Okay. And just last few questions. Sir, what is the land status in the Varanasi-Ranchi Expressway project?
So, it is at an early stage where I think we should get the stage 1 approval soon. Fingers are crossed. Once it is there, then, we've already mobilized for these projects. The financial closure is already done. So, we are very positive about these projects, and these projects should start early.
But sir, is there a possibility that the project will get cancelled or something? Because we have secured the project 2 years back, and nothing, we have not yet received appointed date. So is there a possibility that the project will get cancelled or something like that?
There are about 3 listed companies who are already having projects, 2 projects each on this expressway. And their total 13 packages out of, I think one is not bid out, 12 packages are already allotted. It's difficult to, for NHAI also to terminate all these projects. Terminating, they have to pay a lot of payment, and they've already paid a lot of land acquisition. And these projects are almost 2.5 years old. So I don't think we have not heard anything negative about these projects. So the department is also really pushing hard to start these projects. And we've been getting only positivity about these projects.
Okay. And sir, last one only. Out of this total order book of around 10,300 crores, if you look at present, so one has to exclude Bhubaneswar project of around 800 crores, correct? 900 crores.
Yeah.
So total,
we have added also one project, that is TNT project.
Okay, so 10,300 minus 900, that comes to around 9,400 plus around 400. So you are saying at present it would be around 9,800 crores, correct? Closer to
something like that, yeah. Yes.
Oh, fine, sir. That's it from my side. Thank you.
Thank you. The next question is from the line of Hitanshi Agarwal from AB Investments. Please go ahead.
Hi. Thank you for the opportunity. So my first question is, our standalone and consolidated EBITDA margins have contracted on year-on-year basis despite the revenue growth. So, what were the key drivers of this margin pressure? And do you see this on temporary basis or structure basis?
So, ma'am, if you see my EBITDA margins, first of all, I'll let you know my standalone. So, my standalone EBITDA margin, if you see from FY24 itself, so we are ranging between 11% to 12 to 12.5%. So how we need to understand how we derive the EBITDA margin. It depends what sort of construction activity is being executed in the respective year or a quarter. If the contract involves a lot of structural work, the EBITDA margin would be on a very higher side. If it is a normal work without structural work, then it will be range between 11 to 11.5. Then I just want to quote the number. My FY24 EBITDA margin, excluding bonus and royalty, was 13.64%. FY25, it is 12.24%. Q1 FY25 last year, it was 12.76%, and this quarter, it is 11.42%. So what we need to see is, the company is generating the pure EPC margin, what they have given a guidance, that is 11 to 11.5%. Number one. Number two, when you talk about the console number, so I just want to restate how we derive the console. Console depend upon standalone plus whatever profitability you derive upon from the HAM project. In the case of HAM project, a profit arises when a contract is completed and you start with the annuity. In the present case, as we have mentioned in the press release, that one contract has already been completed. We have already received annuity amounting to rupees 177 crores, which has been duly accounted for, and accordingly, the EBITDA is increasing in the consolidated. This year, we are expecting that we are completing two more projects, that is Bathinda Dabwali and Jalbera. So we feel that consolidated number, this number would be on a higher side as compared to a standalone number.
Okay. Got it. And sir, one question on the HAM project, the equity infusion which we have done for this HAM project. So do you see our finance cost increasing in the future?
No, what we need to infuse, it will be infused in the SPV. And the source of equity is the cash accruals which we are generating in the Ceigall India Limited. So there is no question of increasing the finance cost purely because of equity infusion, because equity is infused from the sources, all independent sources, rather than taking the borrowing from the bank.
Okay. And sir, just to follow up on the HAM, so what annuity receipts are expected from the operational HAM assets in FY26 and 27?
Yeah, of course.
So as we said that in case of a Malot, we are tentatively already receiving an annualized annuity of 100 to 120 crores, and we are also expecting that even COD, we are expecting the COD of the contract precisely maximum by the end of second quarter or the early part of the third quarter. So from once the COD is issued, we will be likely to receive the annuity amount from these two projects also.
Okay, great. And so just one last question. How do you see the equity requirement profile over the next 12 months? And is internal accrual sufficient or will raise fresh debt or equity?
Yes. So as we mentioned to the reply to our query, the total equity which is pending to be infused is 872 crores. This is the equity which we need to infuse over the remaining project. Now, as per the bank sanction, we get a sanction structure in a way that at the time an appointed date is issued, we need to infuse only 30% of the equity. Remaining will be issued in line with the progress of the report. So, considering this 30% level, we believe that 872 crores would be infused over next 2.5 years. This is the first point. This I'm giving you a bifurcation of the equity. Number 2 point, which is very important to understand, what are the sources of equity? Number 1 is cash accruals, which the company is getting. Number 2 is the unencumbered FDR, which we are having with us as we speak, which we normally keep on month-to-month basis just to support the equity requirement of a HAM. Number 2. Number 3, Malot HAM project was completed. Now we are in the process of getting it refinanced. Once it is refinanced, we would be getting a top-up amount ranging from 120 to 140 crore. This is from only pure Malot. Since we are expecting the COD of the remaining two projects in the third quarter this year, we will getting it refinanced, and I'm expecting a top-up of close to 200 crore from these two HAM projects. So considering a top-up of 200 crore from two HAM projects, 125 to 140 crores from Malot, I believe we would be having a independent source of 340 crore in the parent company, which we derive it as SPV company, to support the equity requirement. And this equity will not be for the existing HAM. Yes, it will enable me these three sources: top-up amount, unencumbered FDR, independent cash accrual from Ceigall. These three sources put together will provide me a very strong cash flow support for meeting the equity requirement of existing project as well as the future HAM projects which we have already bidded. We feel, as the mixer mentioned, that we are expecting an order inflow of 5,000 crore. So out of which, whatever will be the proportion of equity, we feel that this total capital inflow will enable us to meet the equity requirement.
Okay. Got it, sir. Thanks a lot.
Thank you.
Thank you. Ladies and gentlemen, in interest of time, we'll take this as the last question for today. I would now like to hand the conference over to Mr. Aryan Sumra from MUFG Intime for closing comments.
I would like to thank the management for taking your time out for this conference call today. And also, I would like to thank all the participants for joining. If you have any further queries, feel free to reach us. We are MUFG Intime India Private Limited, Investor Relations Advisors for Ceigall India Limited. Thank you so much.
Thank you. On behalf of Ceigall India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you so much. Thank you.